Hi there. Today I'm going to talk about the difference between mortgage renewals and mortgage refinances. Let's start with the main difference between the two. While the terms renewal and refinance may seem interchangeable, they represent distinct differences. Mortgage renewal is when there is no new money added to your mortgage. The balance essentially stays the same. Mortgage refinance, on the other hand, is when new funds are added to the existing mortgage principal, thereby resulting in a larger mortgage amount. And that's pretty much it in a nutshell. There are a few additional differences I'm going to point out here shortly, but that's the main difference. Renewals do not include new money added to your mortgage, whereas refinances do. Okay, now that we've identified the main differences between the two, let's dig deeper and extract some of the main features of each. So let's start with qualification. For a mortgage renewal, there is absolutely no requalification required if you stay with your current lender. However, if you switch to another lender, you must start from scratch and essentially requalify. The same goes for a mortgage refinance. If you refinance your mortgage, meaning you are increasing your current mortgage principal, you're adding new money to it, you must also requalify. When it comes to interest rates, mortgage renewals generally offer better rates. Now, that's not to say that you can't get the same rock bottom rate with a refinance, but it's not typically the same offering that you would expect with a renewal rate offering. Some lenders will be consistent and offer identical renewal and refinance rates, and others won't. Let's move on to fees. Regardless of whether you're moving to another lender or remaining with your existing one, mortgage renewals have no costs involved. There is a legal process and possibly an appraisal, but don't worry, these costs are taken care of by the lender. Mortgage refinances, on the other hand, different story. Fees are typically not picked up by the lender, but sometimes they are, with random or seasonal promotions. If an appraisal is required, it will set you back anywhere from $275 to $400 these days. And for the legal, it could be anywhere from $400 to $800 depending on how many payouts, if any, you will be settling for your refinance. The appraisal fee is out of pocket, but the legal fee can be tacked on to the mortgage. Next point, amortization adjustments. Mortgage renewals restrict you from resetting your amortization past your starting amortization schedule from the onset of your mortgage. So if your mortgage blossomed as a 25-year amortization 5 years ago, your renewal notice would signify a 20-year amortization schedule at renewal because 5 years went by. But because your start amortization was 25 years, you would be able to revert back to the original 25-year amortization at renewal time. Mortgage refinances, on the other hand, had offer way more flexibility, allowing resets as high as 35 years, but generally come with interest rate premiums for increasing beyond 25 years. In summary, mortgage renewals sometimes offer better or lower rates and a fee-free transaction, while mortgage refinances provide flexibility in adjusting the amortization schedule and are often triggered by various changes to the existing mortgage structure, including debt consolidation. Thank you for tuning in. Talk again soon.